Hey, welcome back to See Today Business. Warren Buffett, one of the wealthiest individuals globally, frequently shares insight on investing. His recent guidance focuses on both investment strategies and leading a fulfilling life. On smart investing, Buffett emphasizes making swift investment decisions only after thorough understanding and research. His advice is to avoid investment we don't fully comprehend and not worry about missing opportunities we haven't extensively studied. On Successful Life, Buffett advises to envision our ideal obituary and shape our life accordingly. Aim to find meaningful activities and people to share life with. Embrace trial and error to discover what truly interests us, keeping your long-term goals in mind. Now, for Warren Buffett, we need to understand what we are investing in. So we have looked on how to skim a company's earning reports before on previous episode. Now let's start today's discussion with EPS or earning per share. For that, we have our personal finance enthusiast here in the studio, Mas Dani Rachmat. Thank you so much for joining us today.
Thank you for having me.
All right, so we're gonna talk about, there's so many things that we need to look at before we invest in a company. I love like how when people say like trading on stocks, like no, sometimes Buffett say like you need to invest in companies. So understanding public companies' earnings. So this is some of the things that we're gonna continue to discuss. We already kind of discussed like how to skim a company's earning before last week and the previous week. So today we're gonna talk about EPS, and then there's a lot more coming up later on. So, but for today's episode, we only focus on EPS. So tell me, what is EPS and how do I calculate one?
Yes, EPS stands for earning per share.
Okay.
So that if you want to know how much profit that your company can make for per share that you own, you can use this EPS. We calculate with dividing the net profit with the number of shares outstanding in the market.
All right.
So that, for example, if you hold like 5 shares of Apples, which is very expensive nowadays, so you really want to know how much is the profit that I can get from each of these shares that I hold.
Say that again. How much profit
that I can get, that the company is making
for that
each of
those 5 shares that you get. Oh, for each of the shares that you get. All right. So let's see if we have any example of how we're gonna calculate this. So you were saying before the net profits
divided by the number of shares.
So this is a pretend companies, we call it Jamu.
Yeah.
And then apparently throughout the year they're making 934 billion. That's
very big.
Very, very big. At the same time, they have 30 billion shares
outstanding in
the market that anybody can. So by this calculation, the EPS
per share, this company making 31.3 rupiah per share.
31.3 rupiah per share.
So that looking at this, we don't know whether this is good or bad, so that we can use this EPS, this ratio, to compare with other company.
Okay.
So for example, if you have other company in the same industry with this Jamu,
whatever. Okay.
And then that company make like 120 rupiah per share.
Okay.
So which one will you invest? Which one that you want to have?
Depending just on the EPS only.
Yes.
Then it's the 120
of course.
rupiah. Okay.
So that is why this EPS is important.
All right. So but again, just be mindful for people at home. This is just one of the tools, one of the triggers that we're gonna use to decide. Again, as I mentioned earlier, there are other things that we're gonna look at. But for today, this is one of the indicators we're gonna start with.
One of the indicators. But why we use this? Because for EPS, we will focus on the profitability of the company.
All right. So
coming from the net profit.
All right. So but again, it's the profit compared to the share amount. So right now we have Apple earnings. And then we have Microsoft earnings, and then how the EPS compare to one another. So we have the numbers right here, 1.52, 1.26, 1.46, 2.18, while over here we have the up of the 2.45.
Seemingly continuously improving EPS for Microsoft.
Yeah, and then we're looking at quarterly, right?
Quarterly,
this is by quarterly. So let's take a look at Apple for a second. So for Apple, right now, For the first quarter of 23, they have a dip on the second quarters
Yes.
right here. And then they, from 1.5, I'm sorry, let's write that a little bit bigger.
Yeah.
So this is 1.52, it dropped to
1.26. Yes.
What should we understand about this?
So many things can happen in the course of the quarter.
Okay.
Probably with the lower profit here, maybe the sales of Apple is dropping.
Okay.
Or maybe their sales is increasing, but they cannot manage the cost of operation.
Right.
So that is why they have a lower net profit
Okay.
the next quarter.
But should these be a good indicators? But by the end of 2023, it jumped from 152 to 2.18 right here.
Of course, of course.
Okay.
With this, we can get it just that probably during after the second quarter of 2023, Apple find what is the challenges, what is the obstacle in their operation, so that they can improve their profitability, or maybe they can jump their sales and they can manage the cost relatively the same, so that they can have better profitability afterwards.
Right. Now, this is one kind of interesting from what I'm seeing. This is one of Buffett's favorite stock,
Yes.
Apple. Even though he's dumping the stock, at the same time, he still owns most of it.
Yes.
But if I go over here, Microsoft,
Yeah.
you mentioned earlier, like, which one will I pick if I just look at EPS?
Yes.
Like the higher number, which is like 31 compared to 100. Right now, I'm looking at this is
Yeah.
2.18 compared to even their first quarter of 23 is
Already
2.45.
2.45, yes.
And then even at the end of the last
Almost
quarter,
$3.
almost $3
per
now,
stock. Yes.
why would I pick one or the other based on the EPS? Or is there a story that we can see from the EPS on the Microsoft?
There are so many possibilities here. We only see the 2023, right?
Right.
While both companies have long history of operation.
Go back
so
to
that,
many
yes,
years, yes.
we have to also understand how is their earning per shares compared to the previous years,
Right.
and how many stocks are there.
Okay.
Whether Apple already did stock split or something before.
Right.
Because stock split will obviously affect the EPS.
Right.
After they do the stock split, the outstanding stock in the market will be way more, right?
Okay, I'm gonna pause you for a second. So for those at home that's wondering what's a stock split is, meaning like if today you have a one stock or one share, and then if they decided to split it, let's say one stock equals to two, now you have two shares or two stocks. Right.
Usually company do that because their share price per share is already too high, so that it is
Okay.
Back to this, so that with this we can also learn that both companies, even though they are both in technology, but each of the companies have very different businesses.
Oh.
Apple's main business is selling you iPhones, iPads,
Right.
and those kind of
So
gadgets.
we're talking about devices right here.
Yes,
Okay.
devices.
All right.
While
And then-
for Microsoft, yes, they also, maybe some of the Microsoft phones, have you seen that? But most of their sales coming from the services that they sell.
Okay, so this was more focused on the services, because even when people at home or us, when we buy a computer, it's actually usually
now it's already coming with the original Microsoft Office and Windows.
Right.
So that we can see that for gadgets, devices, maybe now you buy, but then you will buy your next phone in 5 years,
Right.
maybe in 10 years even.
I don't know about that long, but okay.
Yeah, so that can explain why the decline in the
sales on the
sales
on
and
the EPS,
profitability here. While for Microsoft services is people continuously use it, right?
Right.
Even for updates, so they have to buy. They have to, for Microsoft 365, we have to pay like every month.
Right.
If you don't pay annually,
Then you kind of lost all that
Yeah,
data
yeah.
that you've been working on. And all
so
that stuff.
that is why maybe they have more stable and way bigger earning per share here.
Okay.
So that if you want to compare these two companies, which one should I buy?
Based on the EPS.
If I were you, based on the EPS, I will go deeper in Apple's earning.
Okay.
Where are their business segments are?
So where's the money's coming from?
Yes.
Is
Is it only relying on the devices selling, or is there any services sales that can also contribute to
Right.
the profit and everything.
That's one of the things about Apple nowadays, that they actually have gaining on their services,
Yes.
especially for us on the all this.
iCloud, those kind of things.
Right.
Then when you're taking pictures, so that you can open it like 10 years
From down the line.
from now.
yes.
Yeah.
And then you can open it on any other devices that you want. So is there anything else that we need to know for EPS right now, just looking at this data?
Yes, for the EPS, as an investor, I really want to buy a company that can show me constant improving of EPS.
Okay.
Because that is the bottom line of investing.
So
You're looking for profit.
So let's start from the EPS, not just the profit, but again, we need to look at the how is it growing, like the graph before.
Yeah.
Both companies look actually still growing,
Yeah.
even though there's a dip on the Apple.
On
but
Apple.
it looks all right. So again, understanding public companies' earnings is going to help us on our investment. Previous episode, we already take a look at how to skim a company's earning reports. Today, we just look at the how to understand the EPS and like how it's going to benefit us. Coming up next time, we're going to talk about book values. Of course, there's going to be a lot more about the per book values, per earning shares, debt ratio, and many more on these matters. We're going to take a look for upcoming weeks. So thank you, Mas Dani Rachmat,
Thank you very much.
on that. So disclaimer, any of the stocks that we mentioned here is not we're not supporting any of those stocks. We just trying to look at it, and then the decision is back to you guys as the customer or investors. Please go ahead and find somebody that's knowledgeable and make sure that you are using or investing your money wisely. All right, with that, we are going for a break. When we return, our daily recap from the stock market you don't want to miss. Stay here on. We'll be right back.